The market for sellers does not look promising for the next 2 months, according to the Cromford Report, and a fall in prices is now more likely than a rise for 2025. So we're going to talk about that today and what is going on nationally and, of course, here in Phoenix. Also, for all of you buyers who've been waiting on the sidelines to see prices coming down, they're coming down. And so we're going to talk about some recommendations on when you should buy. So today we're looking at this table of the CMI. This is for all the major cities throughout the Phoenix metro area. And if you're new here, anything over 110 indicates a seller's market. And there are only 3 cities left in a seller's market. Fountain Hills didn't change from last month, but Avondale and Chandler both came down. Chandler came down significantly by 13% over the last month. Still hanging out in a seller's market, but a very, very weak seller's market. So the majority of the cities in Phoenix Metro are now in either a buyer's market or a balanced market. So sellers over time have really lost a lot of leverage in this market, and it's mostly because we have been seeing a big increase in the number of listings on the market and pretty much a level off and a little bit of a decrease in our demand. So there are 2 new trends in the market as of May, one of which being we've started to see active listings taper off the slightest bit. So this is actually good news for sellers. Your competition is, winding down a little bit. I mean, ever so slightly, but still, this has come down just slightly. We're starting to see the number of active listings instead of increase every single week, start to go down. Over the last 4 weeks, there's been about 9,800 new listings added to the market, and we've been going at a pace of about 10,000 every 4 weeks since we started this year. So that's how we can measure that there is a little bit of a decrease in those new listings coming to the market. You can see every single month we've been almost every single month we've been over 10,000 new listings, except for the month of February where we had 9,800. Last month in April we had 10,000, and so far this month we've had about 3,200 new listings added to the market. So that might bring a little bit of relief for sellers, but on the other hand, we have some not so good news, and this is one of the reasons why the Cromford Report is saying the next 2 months are not looking great for sellers, because the listings under contract is not keeping up with the amount of active listings and new listings coming to the market. In fact, this is the lowest number of listings under contract that we've seen since the year 2000. If we take out the exception of 2007, 2008, obviously those were very drastic years, but going back all the way to the year 2000, we haven't seen this number of listings under contract so low. And you have to remember too, Phoenix Metro was smaller back in 2000. So we even had, fewer buyers out here, fewer activity, fewer homes to work with, and we still had more listings under contract than we do right now. Now, why do we care about listings under contract? Because this is showing the buyer demand. This is showing that buyers are out there putting out an offer on a home and coming to terms with a seller. So this is indicative of our buyer demand really slowing down. If I go all the way back to 2005, we still have lower listings under contract this year, 2006, and then obviously 7 and 8 rough years. If we go to 2009, we still had more listings going under contract than we do today. And as I add, all of these years, you can see this line is pretty well above where we're at today in 2025. So the Cromford Report is saying that this low number of listings under contract, coupled with a low annual sales rate that we've been seeing, is really not promising for sellers over the next 2 months. Now, they've also said that prices are more likely to fall in 2025 than to increase in 2025. And that is not just the Cromford Report saying that. We're starting to see reports from Zillow, other analysts out there about their prediction for prices for 2025, and it's all looking pretty weak at this point. If we take a look at where we're at here in the Phoenix metro area as it relates to monthly average price per square foot, you can see that we're down not only from January, so going back to January at about 316 a square foot to today at 301, but also if we go back to April of 2024, we'll see that we're actually below that as well. That was 308 a square foot compared to the 301 per square foot. So both month over month and year over year, we are on a downward trend for price per square foot. So the Cromford Report is anticipating that we'll probably see our supply start to level off, but we are going to see our demand continue to decrease. So we'll be kind of in the same situation without increasing supply, just not a lot of demand. Therefore, again, sellers will still have that competition on the market. Prices will likely continue to come down, especially as we enter into a slower season, which is summer here in the Phoenix area. Now, why is this buyer demand going down? Well, yes, it is exciting that prices are starting to come down for buyers, but I think a lot of buyers are feeling like it's just not enough yet. Plus, rates are not making any big moves for buyers, and many buyers are dependent on rates to have an affordable monthly payment. So the Fed met last week. Powell rules out a preemptive rate cut to blunt any tariff impact. So we have a lot going on right now because there's been a lot of talks about tariffs. That's started to shake up the markets and the economy. And then we have, our normal things that we're tracking like GDP and inflation, as well as like jobs reports and employment. And so all of that is affecting what's happening in the market and the reactions and the bond market, which then affects mortgage rates. And so last week when the Fed met, they are keeping interest rates at the target range of 4.25 to 4.5. Keep in mind, the federal funds rate is not the same as the mortgage interest rate, but the commentary from the Fed and decisions that they make can definitely affect what happens with mortgage rates. So Fed Chair Powell said, it's not a situation where we can be preemptive because we actually don't know what the right responses to the data will be until we see more data. As this article says, the Fed has been on hold since its last cut in December as it waits to evaluate the tariff impact. So the latest in tariffs, we're pausing right now with China for another 90 days, I think it is. So there's just a lot of moving pieces right now. The Fed wasn't ready to act one way or the other because they just don't have all the information that they need to make a decision. Meanwhile, mortgage rates jumped to a 2-week high after U.S.-China trade talks. This was as of Monday. Mortgage News Daily is saying tariffs and trade policy have been a new and important consideration for the bond market for just over a month now. That matters to mortgage rates because mortgage pricing is primarily determined by bond prices. The reaction for rates is complicated at first glance. To whatever extent trade policy results in lower economic growth, it would generally be good for rates, all other things being equal. And that's the key there because we can't anticipate that all other things are going to be equal with so many different things going on. To whatever extent trade policy results in higher prices, lower revenue, and lower foreign demand for U.S. assets, it would push rates higher. So those are things just to keep in mind if you're a buyer and, trying to follow what's going on economically to determine what may happen with mortgage rates. That is just kind of like a little indicator of one way or the other things could go based on these trade negotiations. So where are we at with the 30-year fixed rate right now? 6.92%, really not too much change. It's gone up slightly, but just not a lot of change from what I was talking about last week. We're also waiting on the CPI, and that could have an effect on what happens in markets. So if you are out there currently looking for a home, make sure to check in with your mortgage lender just to keep an eye on what rates are doing and how that may affect your payment. Now, if you're trying to avoid interest rates altogether, there's a couple options that you have. First of all, buying cash would be great, but most of us aren't able to do that. You could also consider an assumable mortgage. This is a great time to assume a mortgage if you can find a property that works well for you, because a lot of mortgage rates from the past are much better than what we're seeing today. You could also consider an option of seller financing that can get you a lower mortgage rate as well. I have a list of homes that could be assumable or seller finance below if you want to check out that information. So things are kind of all over the place, right? We are seeing this price decrease starting to take place. We are seeing a lot of listings remaining on the market and buyer demand going down, even though we're seeing prices come down and then rates just being quite stubborn. So what is the overall sentiment? So according to this article from Yahoo Finance, Americans still feel okay about the housing market, but more are worried about selling. So they're looking at the Fannie Mae Home Purchase Sentiment Index. It increased 1.1 points in the last month, but it is down 2.7 points in the last year. The overall sentiment improved as survey participants grew less worried about losing their jobs, and attitudes about home buying remained unchanged. But still, attitudes about selling a home and the direction of mortgage rates turned more negative. So even though it's turned more negative, there's 58% that still think it's a good time to sell a home. It's down from 64% in March, but still over half of the survey respondents still think it's a good time to sell a home. And I think this is interesting. Consumers remain split on where mortgage rates will go, 26% expecting them to go down and 36% anticipating they will go up. So even though this is just a survey, I still think this is really important data to focus on because it helps us get a pulse on what people are thinking and feeling. And of course, as a seller, unfortunately, you're not really in the driver's seat. It is whatever a buyer believes your home is worth, or however comfortable buyers are to get out there and actually write an offer on a home. That's what essentially controls the market. So buyer sentiment is important for us to pay attention to in combination with knowing how many listings are actually on the market and what that competition looks like. Now, many of you may know Barbara Corcoran from Shark Tank, but she also has a huge real estate business. She has been doing this for many, many, many years, and she thinks you should buy a home now. And she says it's a good time to buy because it's an uncertain market. So although home prices are still elevated, she's saying that many people aren't going to jump in because of that, and one person's hesitation becomes a prepared buyer's windfall. She says this is the time she always buys real estate. There's less competition, the seller's more likely to reconsider your offer that they may have turned away yesterday, and shopping for a good deal is easier. And to some extent, I think she's right. I think it, of course, depends on your situation, but there are certainly deals to be had out there. There are a lot of sellers out there who do need to sell their home and unfortunately haven't had the activity that they've needed in order to actually sell. So they begin to consider some other options, whether that be lowering their price or offering some form of concessions or being a lot more flexible on the work that needs to be done to the house. Will prices continue to come down? Well, kind of seems like it, according to the Cromford Report. However, how long do you wait until prices start to go back up? Of course, the ideal timing would be to buy at the very end of the buyer's market, knowing that you're getting the best deal ever, but it's kind of impossible to time that way. So I am always a believer that if you need to buy a house, it's the right time for you, you can afford it, and you plan to hold it long term, it is the right time for you to buy. Now, the overall CMI in the Phoenix metro area is 75.1, a buyer's market for sure. Anything under 90 is a buyer's market. And remember, there was only 3 cities barely hanging on to that seller's market. Demand is at 81.4, going down just very slightly. And then we've got supply at 108.3. This, as I've said, has started to level off, but we'll have to keep an eye on this. Currently, we're 8.3% above normal. Demand is about 19% below normal. Now, I also love looking at the contract ratio, which we do every single week. And this week, the overall CMI has gone up just slightly compared to last week. We're at 33.4. Last week we were at 32.7. Not really a big difference at all. And overall, that reading of 32.7 is within the balanced warm range, but kind of on the low end of that. Not cold, but getting close to cold. You can see for all of the different zip codes, we've got a lot of green, which indicates balanced and warm. There's some blue out there as well, which is more of that colder market, and only a couple zip codes that have that hot indication application, 85353, and we also have 85335. All of this being based on the number of active listings and comparing how many of those listings are actually under contract. Now, sellers, I know a lot of this wasn't the best news for you. We're going into a slower season of the market. Prices have come down. The Cromford Report is anticipating they will continue to go down. That is why it's so important to price your home appropriately from the start. The market is very price sensitive, so it is really important to make sure you're considering that before you get on the market. If you're curious just what your instant home value could be, check the description below. You can get an estimate for your home value before you get on the market. And buyers, don't forget about those options with assumable mortgages and seller financing. You can check out all that info in the description as well. I'll see you guys next week on my next market update.